What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is July 24th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about a major move we're expecting in Bitcoin over the next coming days and weeks as we approach towards the close of the month in July. Bitcoin is testing a critical price range between many different resistance and support ranges. So I want to spend some time to not only analyze Bitcoin, but dive into some charts we haven't even discussed and talk about the broader macro perspective to understand whether or not we've really got the steam to kick off a new bull market, or if we're likely heading down towards new lows. Outside of that as well, we're going to sponsored review for one of our long-term partners, Energi, where I'm going to be doing a deep dive into one of the few layer 1 protocols I'm actually bullish on into the next couple of months. So stay tuned for it. You guys won't want to miss it. All right, let's go ahead and kick things off. If you guys happen to enjoy the video, consider dropping a like. It's a great way to support the channel. But let's start off by taking a look here at Bitcoin's price action. Here on the weekly time frame, we're still maintaining the blue trend so far, but again, it's important to note here that we are getting very close, just a couple $100 away in potential price decline from getting that red flip. That alone is already going to get us quite concerned here that we may be starting to essentially change the trend here towards the downside. As you can see, there are very few anomalies here that we usually get within the indicator. And when we get, generally speaking, around 2 weeks of consistent red on the indicator or consistent blue from the opposite color, it usually means we're heading into a trend reversal. And if we get that trend reversal, we not only need to be prepared for further downside for those of us who are exposed to long positions, but for us who have been sitting in cash, we're considering potentially building some solid short positions to the downside. But it's not just our indicator here that we're following here. While it does hold a lot of consistency here towards spotting the major trend shifts, it is also important to note that we still, week by week by week by week, have not been able to clear through this range here. We keep talking about this here on the channel. I know I'm beating it like a dead horse at this point, but I really want to signify here that every week we stay in this range and we cannot clear through it, where essentially we are starting to fade slowly lower and lower to the downside as there is more market sell side pressure than buy side pressure. That is a clear telltale sign that this is not a typical bull market, that we don't have the optimism in the market order flow to really drive prices higher. Not to mention, not only have we been chopping in this range here, but along with that as well, we have been generally in an ascending channel between a higher range of resistance and a higher range of support, with higher lows and higher highs, since back here really from October, November, all the way to where we are here today. If we cannot hold in this range here, let alone the resistance band that we're facing right now, and if we start to clear through this channel, I think the bullish argument is going to start falling flat. And it's not that we can't see a potential bullish outcome for crypto, say by the close of this year, but it's that we're going to need either a revisit of the prior lows or even fresher lows where people can come in and provide the ample buy side liquidity and give crypto markets more time to accumulate and go sideways, to consolidate, and eventually set the foundation for a bigger full-on bull market move. This is why I keep on talking about the liquidity trap, relief rallies, and how they can be incredibly deceiving. This is not what we'd want to see within a bull market, that we're pushing sideways here at this range. We should be seeing acceleration in the trend, especially with some of the developments we've had over the past couple of weeks and months, especially around the hype, around the supposed guaranteed BlackRock ETF that's just guaranteed to get posted somehow. It's just guaranteed that the SEC is going to pass. So that's what at least the narrative is right now. If we take a look here at the altcoin space right now, again, we're of the idea that we are going to see a fresh print of new lows coming down here towards, at a minimum, this $160 billion range over the next couple of months. And this is again analyzing the broad altcoin market. So we're excluding Bitcoin, we're excluding ETH and stablecoins. This is really taking a look at the altcoin market as a whole. And again, look at how much of those gains we've already faded here from those relative highs. Around $27 billion, or about 10% from the weighted market cap. Now starting to look like we're about to roll over here by the close of the week. And not only that, but the close of the month. And still not being able to get that blue trend flip. Now I want to go ahead and, as we've talked about, kind of Bitcoin and altcoins here, you guys know that we're still generally bearish here. But it doesn't just come from me being negative on crypto. It comes from a clear telltale sign that not only crypto is in a difficult environment, but the broader macro sphere. Now, we've obviously seen equities doing quite well over the past couple of months. Equities have gone through a significant rally. There's no doubt about it, especially the technology stocks when it comes to analyzing those that are exposed to AI, mainly the big FANG stocks like Meta, Apple, Amazon, Netflix, Google, Nvidia as well has become a new titan, $1 trillion company. But I want to go ahead and point your attention towards a really interesting chart. We may have covered it a long time ago on the channel. This is something we usually only talk about within our newsletter, the Dash Report, which you guys can find out more of down below in the description, as well as get access towards our premium indicator here. But the key thing I want to talk about is how we've had technically the worst week here, definitely from a technical analysis perspective, but also from percentage decline, in the IXIC SPX ratio. This is the NASDAQ divided by the S&P 500. Now, it's important to note here that the vast majority of the gains, whether you're looking at the S&P 500 or the NASDAQ, has been coming from these big technology plays. But essentially speaking, the NASDAQ here is kind of a sign for optimism around growth stocks versus the S&P 500, which is a broad market exposure towards the broader stock market and also has a lot of exposure outside of just those technology plays. That's why we can see discrepancies in this ratio where essentially when risk on narratives start to take off like they did here going into March of 2020 all the way up here towards February of 2021, that's when really the high growth tech stocks had their best returns during the COVID pandemic. But outside of this, while we've also had here since really in January, the tech stocks leading the way forward, this is a sign where people are getting risk on, they're getting excited, and it's a question of whether or not that trend can sustain itself to provide for a longer term bull market. And we've already discussed here that not only do we really kind of not resonate with the potential of AI, I think AI itself is a definitely over the next decade could have the potential to become a transformative technology in many ways or have major disruption in ways we just can't even predict now, similar to the internet. But in its current state here, markets have way overpriced valuations. Not to mention, this past week has showcased that the past month and a half, roughly speaking, right, really actually going back nearly 2 months now, have been completely wiped out. Essentially, the gains in technology stocks versus the broader S&P 500, the gains in momentum have fallen back to where they were back 2 months ago. And this is a really big warning sign to let us know that, whoa, hold on, maybe the same technology stocks that led the last bull market are not going to be the same ones that lead it this time around. That is usually what happens throughout history. But unfortunately, so many people just go back with the same repetitive patterns of buying the plays that did well over the last decade, and there's usually some new narrative that sells people as to why those technology plays are going to be the same ones that went out. Again, take a look back during the dot-com bubble, take a look back during 2008. The technology companies, or more specifically the stocks that won during those cycles, were likely not the ones that led the next time around. Doesn't mean that they can't go up, but it doesn't mean that they're going to be the leading stocks. Now, right now, we have maintained the blue flip here since back in January. Again, our indicator playing really strong here on some of these bigger swings. But if we start to get that red flip here, that is going to be our telltale sign, not only to be generally bearish on technology plays, but broadly bearish on all macro assets. It's going to fill into our thesis of potentially building a short position in the short term. And as we start to take profits on the way down, starting to reverse our position, accumulate, and buy into capitulation, where the smart money and institutional investors are likely setting in their bids. It's clear here by Bitcoin's price action that right now, we're not getting a bid here to drive the market. There's not enough fuel, which means there likely needs to be more blood, or we essentially need to come down towards a better low entry point for some of that buy side liquidity and potentially chop down in this range for a much longer period of time than many people think. But I want to go ahead and talk about what's going on here with monetary policy and what's going on in the bond market, because I know many of you out there are essentially quite surprised, with how inflation has been looking in the economy, with the supposedly positive CPI read. Yet we still see that bond yields are going up right now. Whether you're taking a look at shorter term maturities like the US 1-year yield, the 2-year yield, their long-term trends here are optimistic. They're trending to the upside on practically every single form of treasuries. I mean, it doesn't matter what maturity date you're looking at. Generally speaking, either the longer term 20, 30-year yields are still holding up on the upper band, or if you're looking at these shorter term maturities, which are much closer to the Fed funds rate, essentially speaking, they're saying that the Fed is going to continue hiking rates. And it's not just the bond market that's predicting this. The CME Fed Watch tool that we bring up from time to time for the next FOMC meeting that's coming up in about 2 days and 8 hours is expecting with 99.8% confidence that the Fed is going to raise another 25 basis points. So what gives here? Aren't the inflation numbers so positive? Aren't they a guarantee that not only are we, avoiding the concerns of a recession, but that the Fed has been able to cool inflation? Well, the problem is, at the end of the day, guys, inflation is sticky, and the Fed is still a far ways away from getting towards the point where it needs to get, because it doesn't just need to get inflation down to 2%. It needs to get it below that level for a short window of time and keep it below 2% for a prolonged period of time. And that is a very difficult task. The point we have brought up here on this channel is that not only that the federal funds rate is going to go higher than most people expected. When many people thought 3% or 300 basis points was the cap for the Fed, we were calling for 5% plus. And we are now looking to go well even beyond that metric, that number that we predicted back over more than a year ago. The reason it is important to understand here is that not only are we expecting that rates will continue to climb higher, in order to really squash inflation, cool demand, and balance and bring equilibrium to supply and demand, but outside of this, well, that the Fed is going to keep that capped interest rate, whatever it may be, for a much longer period of time at that range than many people expect. And many people believe that by this year, the Fed is going to be declining interest rates. They've been thinking that for some time, but if you're looking at this and you realize we're already here in July and the Fed is still raising interest rates, it means one of two things. Either the Fed has still got a ways to go on tightening here, that there's still too much excess liquidity in the system, that it's going to continue rolling off its balance sheet, or that the only means for the Federal Reserve to eventually kind of revert course here in the near term is if something starts to break. Either scenario is good here. And this is why, again, we've come back to the point here that inflation only properly ends with a recession in the vast majority of cases here. The Federal Reserve, unfortunately, needs to cool the economy, and they need something that changes sentiment here. Because if you look at credit card debt, if you look at consumer activities, things are still bananas right now. They have not cooled down properly here. Now, this leads me back here to talking about, the kind of broader altcoin space here, guys, because I want to spend some time here to talk about one of the few plays that I'm genuinely interested in. It is important right now that if we're analyzing this market, we're watching the plays out there that are making groundbreaking moves in the crypto space, those that are essentially going to give us great discount opportunities. But most importantly, I'm looking for those that are showcasing market strength here during a period of time when the market's correcting, or showcasing those signs that they're basing out and setting that cumulative pattern to be able to make sizable returns over the next cycle. That's why I want to spend some time here as we are preparing for that continued correction in altcoins to talk about one of the few plays that we're going to be watching for, that we're going to be looking to build positions in, and that is no other than Energi, a project we've been tracking here on the channel for the past couple of years, and is finally coming to the forefront, working on business development and getting the technology that it's worked so hard on over the past couple of years out into the forefront. Let's go ahead and spend some time, though, to talk about Energi and why it's such a big deal. If you guys happen to enjoy the core part of the video, consider dropping a like, and let's go ahead and dive into the long-awaited review of Energi. Alrighty, everyone, so in today's sponsored review, I want to spend some time to talk about one of the few crypto projects that genuinely has me excited over the next couple of months to the next year in regards to fixing one of crypto's biggest issues, and that is security. I want to spend some time today to talk about Energi and how I feel it has the ability to become the next major EVM compatible chain and fix a huge issue that is plaguing not just Ethereum, but practically every layer 1 or layer 2 solution that is EVM compatible. And that is the consistent hacks that are going on within the crypto space. Now, before we dive into Energi, the technology that it offers, which I hope you guys will stay around for, I want to spend some time to talk about what Energi offers, how it fixes the issue of security, and how you can get involved and even get some Energi yourself. I want to spend some time to first talk about the problem. If we take a look over about the last couple of years, we can see that there are a whole slew of different layer 1 and layer 2 solutions that function in the same way as Ethereum, otherwise known as EVM compatibility. They offer the same kind of smart contracts and decentralized applications that we love and know on Ethereum. albeit that they have low network fees because they offer more throughput or take traffic away from the Ethereum network, making these applications more usable and cost-effective for the broad public. However, while all these networks were focused on the same exact issue of scalability, we've realized now that whether bull or bear market, network fees are not really the biggest problem. The biggest problem is when you're interacting with these applications, not knowing whether or not you are going to lose everything. Smart contract exploits, direct scams, and personalized attacks have left the crypto industry losing just last year alone $3.1 billion. And the figure that we don't hear about beyond the huge headline of money that's getting stolen between personalized attacks and protocol attacks is the issue of people leaving the space. When you get burned so bad as losing all of your funds, you are likely no longer returning to the crypto space, or at a minimum are going to take a lot of convincing to come back. This has been one of the biggest setbacks for the crypto industry for multiple years now, and there is no serious addressment of these issues. We constantly see people say, use at your own risk, it's your responsibility, not your keys, not your crypto. And while that's all very true to a degree that you need to be more protective with your funds in the crypto environment, it should be the responsibility of a protocol to have safety guardrails for experimental technology, which all of DeFi pretty much is at this point. And this is why I believe Energi has the opportunity not only to become the major EVM chain that offers scalability and low fees, but also keeps security in mind that will allow it to be the test bed for great applications that reach not only Ethereum, but the broader L1 and L2 ecosystem. So without further ado, I want to go ahead and talk about why I believe that while DeFi is great and that it is a solution to the problems of not only centralized finance as a whole, but it can eventually get past all these issues, we need to talk about how Energi can be the solution here towards solving these broader issues. All right, so let's go ahead and kick off with the basics here. And I want to lead into how Energi actually goes about solving security in a decentralized way. The first thing we need to understand here from a functionality perspective is that Energi itself, like Ethereum and other layer 1 or layer 2 networks like Optimism or Binance Smart Chain or Polygon, is EVM compatible. This means that any applications you may use on Ethereum or on Binance Smart Chain or Polygon or Arbitrum or Optimism are all capable of being deployed and utilized in the same fashion on the Energi network. This is a big benefit here for a network like Energi because it not only provides them a solid framework to deploy existing applications, but is a framework that is familiar to tens of thousands of Solidity developers, the biggest crypto development ecosystem we currently have. So this allows for great ideas to start to flourish on a network like Energi. Where Energi stands out against the whole slew of other layer 1 or layer 2 networks is in its focus on governance and security. Now I want to go ahead and bring some attention here towards Energi's statistics so far. Even being a relatively small chain comparative to that of Ethereum, we can see so far that Energi has had some incredibly impressive statistics. The numbers themselves don't lie. So far, Energi has been able, with its current implementation of security, to remove 95% of attacks on the network, whether they be personal or protocol level. And along with that as well, this has been able to save users on the Energi network up to $1.1 million in assets, whether it be direct tokens or NFTs, you name it. This is a huge advancement forward for any kind of EVM chain. I don't think of any other network out there, I can't think of any network that has that same degree of protection for new applications and new users. So how does Energi actually go about achieving this? This is an important question we need to understand. Well, Energi achieves this through a common practice in cybersecurity known as defense in depth. And it is the first time that a blockchain network has actually implemented proper defense in depth when it comes to its security apparatus. Essentially, it means that there are not only multiple layers of security in the network that prevent fraudulent activity and malicious actors from becoming successful, but if one layer of security fails, that there are multiple other layers to inevitably protect user funds. That's why over 95% of exploits that have happened on the network, whether they be personal attacks or protocol level attacks, they have been able to be prevented and users have been recompensated on their funds. This is a huge step for the crypto space. And the way they're able to achieve this is through multiple layers of security, right? It's defense in depth. So we've got to talk about some of those layers that Energi utilizes. The first one being that users can not only set notifications on their wallet address, where they'll get notified if there are transactions, perhaps ones that they didn't initiate, but with that, they can actually report to the EBI or Energi Bureau of Investigation, a decentralized governance system that can actually vote amongst token holders and users within the ecosystem as to whether or not this was a malicious act. It gives them time to do a proper investigation, whether it's a protocol exploit or someone who's getting people to use a malicious smart contract and lose their funds. And from there, if they determine after some window of time that this was a malicious attack, they can essentially drain the funds into a recovery smart contract and redistribute it back to one or multiple users who were affected. And one of the biggest protective layers here that Energi offers through its levels of defense in depth is a block time requirement of over 5,000 blocks in order to actually withdraw funds from a centralized exchange. This is a huge step forward, and while it does mean that there is a longer wait time in order to actually be able to essentially sell Energi on an exchange, this prevents people from being able to exploit Energi and other Energi-based assets and be able to run away with the money. So that you know that when you're in the Energi ecosystem, there are no exploits, there are no criminals that are going to be able to get away with stealing your funds. Basically speaking, Energi takes a little bit of a time delay to go into fiat and get out of the entire crypto ecosystem in order to make sure that there are no exploits on chain. And this is a really great narrative, I think, in the long term. This is going to allow Energi to essentially become the test bed for any new exciting applications. If you're like me, folks, and you like DeFi as an industry, I bet many of you are feeling the same way I do now. I have been so upset to see the lack of innovation in the DeFi industry over the last 2 or 3 years. I mean, can you think of any great new applications that are being built? And I'm not here to blame developers for that. I'm here to blame our lackluster approach to building an ecosystem for developers to thrive and achieve great things. Because the problem is, if you want to do anything innovative rather than just simply reproducing what's already been developed, you need to worry about constant smart contract exploits, and essentially, if you have one exploit on your project, your momentum is killed. There's no way you're going to be able to continue investing time, energy, and money into it because the community will have already lost trust. On the other hand, though, with Energi being this ecosystem where there can be something that goes wrong and users can be protected, it makes for a great story to know that Energi as a network is not leaving its users behind. That if you are taking not only your time but your money on the Energi network, it is going to be respected and you're going to have the ability to participate in new innovative DeFi protocols and not be penalized for it, but likely rewarded, getting early access to some of the exciting projects that will probably eventually scale out to the broader Ethereum ecosystem and other networks, but will start off in Energi and potentially give you early access towards, in my opinion, I think things like airdrops for early stage projects and potentially any new exciting rewards for participating early on in innovative protocols and concepts. That to me is why I think Energi is such a big deal here. Another way I talk about the importance of this is if we look back to the DeFi summer of 2020, which we covered heavily here on this channel. Many people might remember an individual known as Andre Cronje. He was the creator of Yearn Finance and a countless basket of other DeFi protocols that were EVM compatible. And the big thing that he implemented as a practice as a developer was essentially deploying to production. He skipped the necessary step of testing applications within testnet, making sure that there were no smart contract vulnerabilities, going without audits, and essentially deploying the application straight to the network. And it was with a use at your own risk mentality, essentially giving users the opportunity to maybe participate in something really early on, which was cool, but also something that could inevitably leave them losing all their funds. This is a terrible mentality when it comes to a network like Ethereum, which has no security practices, even though it may bring more adoption to your applications early on. But it is a great mentality and totally possible when it comes to the Energi network, because there are those security layers. You can take advantage of the rapid acceleration of adoption in new applications, but at the same time have the protective layers that are going to protect the end user. And Energy's governance doesn't stop at protecting users. It also plays an active role in utilizing the Energy treasury in order to fund exciting initiatives and developments on the network. This is again something that Energy is one of the few, if only, networks that are EVM compatible that actually have a real functioning protocol-wide treasury that you can tap into and serve as a self-funding mechanism to fund great ideas and further develop the chain and hopefully bring not only more value to the network, but hopefully increase the value of Energy, the native currency, and the broader network as a whole. So with this treasury mechanism, you can go out and submit proposals today, and people on the Energy network with their weighted stake in the network will go out and actually vote on those proposals. More details can be found on the website about the intricacies of this, but I think this is going to be an essential mechanism here as Energy becomes this testbed for really exciting ideas. Imagine for a moment if you were throwing some kind of competition and people wanted to put proposals that they needed some Energy in order to fund development and build exciting applications, and people could actually go out with their Energy and vote on the really exciting projects, or that Energy wanted to do an event at a conference in order to get more traction and more know-how from the broader crypto community. So there's so many countless ways that the treasury can play into this, and I think we're really just seeing the beginning of it here as Energy is starting to go on the offensive and get its name out there. And it's important to note that if you're switching from other EVM compatible networks like Arbitrum or Polygon over to the Energy network, you're not going to be sacrificing the low-cost transactions you've come to love. In fact, Energy itself offers some of the cheapest transactions on chain, sometimes as low as a penny, in order to conduct complex transaction types like swaps or minting NFTs. And it does this through its layer 2 masternode network built directly into the protocol, which allows for thousands upon thousands more transactions than many other layer 2 or layer 1 solutions on the network. So this is not only great because it offers low-cost transactions over the long term, it has the growth potential to continue offering those low costs, but it also pleases those who are big on decentralization, where many of these L2 plays out there have high degrees of centralization. So to put it simple, I'm incredibly bullish on what Energy has built over these past few years. I think Tommy and the team have not only built a great network, but at a $3 million market cap, I can't help but get a little bit on edge and excited when there's a network that actually takes security serious and probably has the best security apparatus for its users and applications, allowing it to be this test bed for great new and exciting applications that I think will put Energy on the stage and the broader EVM ecosystem. But along with that, when you have things like the treasury mechanism that pulls inspiration from successful layer 1 networks like Dash that can allow for that self-funding mechanism to continue funneling development and exciting new features, I think that Energy is really positioned well against a whole swarm of copycat EVM chains that just don't offer enough to the table to fix those core issues in the crypto space. I can't wait to see what the team continues to build, and more specifically, now with the foundation built, what you as a community do on the network. Whether you are someone who's just interested in getting some Energy and participating in the ecosystem, I'll leave a link down below in the description where you guys can get access to Energy. It's best to buy it through Uniswap if you want to potentially build a position in Energy, but outside of that as well, if you're interested in being one of the frontier developers in the Energy ecosystem, now that they're focusing on supporting developers and really getting people out there and utilizing this great platform that Tommy and the team have built, you can reach out directly to Tommy over Twitter. If you're just someone here who's interested to keep up to date with Energy, you're welcome to follow Tommy, but definitely consider reaching out via DM or direct message over to Tommy, and he will help you get set up here with deploying a project on the network. He's very passionate about bringing this vision to life for Energy. We've had many interviews with Tommy here on the channel, and I know that in the future we're going to also have some more interviews to talk about some of these key components here of the Energy network. We'll definitely dive deeper into some of these elements as time progresses. But this has been a broad overview of Energy. If you guys happen to enjoy this kind of review of the protocol, definitely consider dropping a like. It's a great way to support the channel. Definitely check out the links down below in the description and get involved today, because right now it's an early time to get involved in these protocols that could potentially be the game changers over the next couple of years. And if you believe there's going to be another bull market, we've got to believe that there's going to be a network that takes security serious. Thanks for watching, guys. I'll see you all in the next video.